are getting this week started. It is Monday, and for me, that's a no trading day. I really don't look at the markets outside of the purpose of people are asking me questions, so of course I have to check what's going on, but it's a day that I do not care to put on trades. Monday to me is giving me information. Every new week, I am reestablishing my bias. I don't carry over what happened in the previous week. I'm going to the new week with a fresh perspective, a new bias, a new narrative, and Monday sets the tone for that. What does Monday do? The way that it prints tells me a lot, because a lot of people think that my bias, because I trade the weekly range, goes on a weekly basis, where on Monday I am then predicting what's supposed to happen on Tuesday, Wednesday, Thursday, and Friday. It's not how my process goes. What Monday does is telling me about Tuesday. Does Monday reverse? Is Tuesday going to be a continuation because of that? Did Monday range? Did Monday expand? What did Monday do? And what is that telling me about what I should do tomorrow? And then when Tuesday prints, what did Monday and Tuesday do? What is that telling me about Wednesday? My bias is always rolling on that basis because things can change. This is short-term trading. I want to be fluent in my bias. I don't want to have long-term predictions that I'm being stuck to, because if you predict a bias for a week and you were wrong, that means every single day of that week you're trading against the market. If you can constantly readjust appropriately, then you're going to be consistently getting on side with the right moves, and that's what I look to do with this type of mindset. But for Monday, I'm not caring about what the market did. I don't care if it presented an opportunity or moved well. These things don't matter to me over time. It helps me on the following days pretty significantly. Of course, at least I'll address the economic calendar here. When I look within this week and I only care about the current week, we have no high impact news events. There is President Trump speaks on Monday. I don't care. I'm not trading Monday anyways. Either way, that usually doesn't matter much for my trading. And then Thursday and Friday, there's two what I consider low impact events. I know they're red folder on this calendar here, but in terms of their significance on the market, I call them low impact events. Now, what this means in terms of my actual plan for the week, if there's no high impact news events, then there's no restrictions on the days of the week that I can be trading. So for example, if there was CPI on Wednesday, I would have restrictions within Wednesday's day to not trade prior to 8:30 or not hold any open trades through 8:30. But when we have only low impact events, that means I don't have any restrictions on the times that I can be trading or certain open positions where I have to be cautious that volatility is going to hit the market and I'm going to get slipped on a position. So I have no concern of that this week. It's going to be pretty free in terms of I just care about what the higher time frame framework is saying. That's going to tell me if I have a trade opportunity. Now, another thing I want to point out is when you see an economic calendar like that, where it's pretty lacking in news throughout the week, there's not much going on. That to me doesn't say that this week can't provide opportunity. It doesn't mean this week cannot expand or make a good price move. It just simply means that I do not have to have any strict protocol around certain days of the week. So I'm not counting out this week as not having opportunity. I just know how it's setting my rules for each day of the week. So I just got off a one-on-one call with one of my students, and there was a really important lesson in there that I wanted to pass along to everyone here watching this, because I think it's going to be beneficial to you to hear this. Now, to give some context, this individual has passed 17 challenges and only failed 2 all time, and just recently passed an additional 10. He's copy trading them all together, and when looking at his stats, he did all of this with a 62% win rate with an average of above 2R, which is exceptional. He was extremely consistent in his trade management. Looking at his stats, there's nothing. Usually when you look at a trader's profit or loss calendar and these basic stats, you can pull out these outliers of telling where they went wrong. Everything was very consistent. No blow up days, nothing that would be any red flag. Very, very consistent and structured in the process. The main topic of the session was one, of course, I'm going to talk about journaling and refining your approach, which was a big part of it. But the lesson I want to share here was his biggest struggle is being able to scale up. He's really caught up in a low risk amount because anytime he tries to push it a little bit higher, it causes him to start making mistakes that aren't necessary. And I have to share that sizing up in trading, when you find your consistency, it's a necessary discomfort, because once you find that consistency, the only way to scale your profits is to scale up your risk. It's a correlated relationship. Only one of them can happen with the other. Now, the way to approach this, if you're looking to scale up your trading, meaning you found your consistency and your edge and you're ready to start scaling higher in your risk, you have to do it responsibly and slowly. There's this threshold where it is normal to feel discomfort, but it's not to the point where it sways your decisions in your trading. So you're trying to find that balance of, I can increase my risk to this point. I feel that discomfort and that's normal. It's fine to have that, but you want to get as close to you can to that threshold where it doesn't change your decision making. You can still execute your plan and your edge as intended, but without that risk factor making any difference. Now, over time, as you get confident, you again start to scale up. What you don't want to do is find yourself past that threshold where you're now risking too much to the point that it is impacting your decisions negatively. So the emotions are too strong and they are actually leaking into how you are making decisions, and it's impacting your edge and your plan. And that's where you have to start dialing back. So it's a very slow process, but it's a necessary and manageable discomfort when done properly. Pretty simple plan for the trading day tomorrow. Looking more bearish on indices. We have Monday, like I talked about. Monday is setting the tone for Tuesday, creating a potential reversal into expansion. So I expect Tuesday to be another continuation lower. And if it remains in respect to these up close candles here on the hourly, printing a bearish daily profile, that's going to be my confirmation, and I would be taking shorts on indices. So we're here. I'm just going to recap and review what actually happened today versus what my plan was. Now, this is a good contrast from the last video where I had a bias that didn't work out in the end, but I still caught a winning trade. Today, I have a correct bias on indices looking bearish from last night. That played out, yet I didn't find any trade at all because it was lacking my confirmation and framework that I'm demanding to actually execute my trade. Now, I also caught a long position on Euro. That was from a plan that I shared on my live stream from Sunday. And I'll put a clip of that in here as well. So I'll get into the charts to show both that trade on Euro and then why I didn't get a trade on indices, even though my bias played out. GBP looks better. Yeah, I mean, GBP can potentially give a continuation. It would just depend, again, if Monday printed. For example, this would be valid if Monday or any of the opening days puts in a reversal low, assuming this low doesn't need to be traded back to. Down close candles. So a shallow run below that low, if Monday were to provide that, that would be valid for a continuation higher. Yeah, I guess same would go for Euro as well. The highs alongside the plan here, this is the low that I was noting where you'd want a shallow run. And the reason I say a shallow run is that the framework of this is of course a previous day low, but we also have these daily down close candles to the left, which in the continuation, I want to see these respected. So 50% of those candle bodies, if it were to make a deep run below this low, that means it would no longer be in respect to these down close candles. That's not what I want to see if it's going to continue. So Monday prints shallow run, but doesn't put in a reversal within Monday's candle. So that means Monday's previous day low is going to be that relevant point where, again, I want to see a shallow manipulation because it can't go through this point here, which it doesn't. So this is a valid manipulation till then look higher. It's aligning with my plan. Now I'm going to go and look at the daily profile. Here is a consolidation, a London reversal into a New York continuation. That's the framework that I'm working alongside. I did take this on Euro because if we take a look at dollar, we have a run of this high and then we go over to Euro here. There is a divergence off the low. So Euro making higher lows when it should be making lower lows. That to me shows an indication of it being a stronger pair. So the same daily profile, consolidation, London reversal, looking for that New York continuation. And then I'll show what my entry was here. After a London confirmed reversal, I want to see the continuation in New York. Down close candle on the 15-minute, close through. Here I'm setting up my position, taking that close. Stop loss goes at that opposing swing, and then I'm looking for at least a 2R trade. Ideally, there's my 2R, and that is the entire trade, looking for that New York continuation. Now, there's certain markets where I may try to get a little bit more from it. I'm slightly newer to trading these pairs here or these markets in general, so I'm being a little bit more conservative, taking that easy 2R, and that is that trade there. Pretty simple, higher time frame framework, good alignment of a daily profile, and then the entry signature is pretty simple in that continuation. Here I'm going to talk about indices, how I arrived at my bias and why I didn't get a trade even though the bias worked in my favor. So we have this high, the market was ranging for some time, and you expect after the manipulation occurs, that's when we start getting these moves. I'm allowing Monday to trade without me because what Monday does tells me about Tuesday, and this week opened in that continuation, Monday making that opposing run higher and then expanding lower. To me, Monday is putting in a high and I assume a Tuesday continuation while we still have a draw open below. Now, when I go down, I can't see much framework here on the daily. It's not giving me much information. So then I'm going to go down to an hourly, a 4-hour, whatever it may be. And here we have in the continuation, looking at opposing closed candles to be respected. And we closed below these here right at the close of Monday's candle. I want to see that respected going into Tuesday. Now, what the confirmation is of this is a bearish daily profile in respect to these up close candles. I can even mark out my invalidation point, 50% of the candle bodies of this hourly up close candles. I want to see a bearish daily profile develop below this point, and even better if it taps into the opening price of this lowest up close candle. The reason I don't have a trade on this is because both pairs at the open have a failure swing at the high. So I don't like to trade away from failure swings. These here, I want to see manipulations because that gives me the reason to trade away from certain highs and lows. Now I could look over to ES at the same point, that intraday high, while still in respect to that invalidation point, it's not manipulating any highs. I don't have a manipulation to trade to the downside away from. If NQ came in and was structured like this, I would absolutely be shorting this because you would have a New York reversal while my bias was bearish, that manipulation, and then I would frame the continuation somewhere in here. So this is an example of when my bias works out quite well, but I don't actually have a trade opportunity to act on because I need that framework. In the moment up here, I am demanding that high to be ran out. If it doesn't happen, then I simply don't have a trade. It is Wednesday morning now. I just ended my trading session. I ended up getting 2 trades, so a pretty actionable day. I got one on oil that ended up being a losing trade. I'll share the framework and why that's a trade that I would take again without any hesitation, regardless of the outcome on this trade. That's the first trade I've ever opened on oil, so I probably have a little bit more learning to do, but I'm still expanding my horizons a little bit. I also took 1 trade on indices that ended up being a winning trade. To the upside, I will share that framework as well, so I'll get right into the charts now. I'm going to start here on oil because this is a very simple framework that I was looking for. Marking out this weekly open, this is Monday's candle. I'm using Monday to tell me what the weekly range should do. Following that, Monday trades higher, Tuesday runs out previous day high from Monday, expands lower, closing through these relevant lows. That to me tells me it's a Tuesday reversal that aligns with a Wednesday continuation to the downside. If that's my bias and the narrative that I'm working off of, I just need a bearish daily profile to print in respect to 50% of this previous candle range because I want that small opposing run in the daily profile alignment, and then I take my entry alongside that. Here we have consolidation around the daily opening price, a manipulation of the intraday high. So consolidation, manipulation, a London reversal. This is what I'm assuming the daily profile is. And then I'm looking for that initial reversal confirmation, which is a change in state of delivery. This is the highest high that ran out this previous swing, the close below that up close candle. That's the change in state of delivery. And then the continuation, we have new up close candles being formed, another close below. And this here was my entry, looking for further downside on this trade here. And my stop loss goes at the opposing swing point. I would look for at least 2R on a setup like this because the risk to reward is good, but it ended up getting stopped out here on this wick at 9 o'clock. That was a losing trade, fully stopped out. And then I moved my focus over to indices. ES daily is trading in a higher time frame range. We've ran out that high, we've expanded and then hit this low. The logic that I'm using here to have an upside bias going into this day is that we have, of course, running into the opposing side of the range and then getting an aggressive reaction back in. But I'm also pairing that with the expansion rule, understanding the phases of price on the daily time frame. And this is something that I've talked about before. When I have 3 consecutive days of expansion, I expect the market to either consolidate or retrace or return back into the range completely. That to me is an upside bias being paired with the manipulation of the opposing side of this range. That's what I'm looking for going into today. Now I just need my daily profile to align to actually get on side and execute this trade. We can mark out this daily open. Price came back down during the New York session where I'm looking to participate. And then we have this intraday low that was ran out. And if I go over to ES, that same intraday low, we have a higher low. This is a divergence that's adding confluence to look to the upside. A New York reversal, knowing that NQ made the lowest low of the day at 9:30, pairing that with a volatility driver. And then I'm going to break down into the charts on the stronger pair in ES because I'm longing. I want better follow through on the stronger pair. I'm going to start dropping down, looking for my reversal confirmation, and then looking for my entry signature to put myself into a market with a defined stop loss, looking for that continued upside. I have the signature that everyone's familiar with, down close candles into the low of day, closed above. That's my change in state of delivery. That's where I'm looking to say that this low does not need to be traded back to. I can start looking for my entry in the continuation here. Now I'm looking for the continuation. We have this opposing candle that formed on the 5-minute, but I didn't want to get caught in a situation like this where it expands a lot from the opening price once it closes through. That doesn't offer me good risk to reward entering here, and you need to put my stop loss all the way down here. So I bent the rules slightly in terms of how I approach continuation entries and refine this down to get a closer close through on these down close candles, and that was here on the 3-minute. This closes right above, gives me a better range on my stop loss, and when I take that entry on the open of the next candle, putting my stop loss at that opposing swing, that's providing me much better risk to reward, where now I can scale up here because it's at my 2R. I can hold more if I need to, versus if I were to have entered on the 5-minute, let's say up here on the open of this candle, stop loss at this low. Now this is providing me 1R. It's skewing the risk to reward out of my favor where I'm not able to scale out of that position. It's not giving me as much room to work with, and I don't want to be dealing with that. So slightly getting on side earlier in order to avoid not being able to scale that position out. So as you can see there, I have my process of getting on side with my trades in terms of my entry logic, which is pretty standard most of the time. But there are scenarios like this where I have to skew my rules slightly to make sure I'm getting on side in the most favorable way possible. Reducing my time frame to get better risk to reward on the trade is an example of that, but I'm doing it responsibly and with logic behind it. You can see how when I adjusted that entry, it was giving me more freedom on the trade management side of things, which is super important to have on any given trade. And I explain this just to show that when you have experience under your system, over time, you can bend the rules slightly when you do it with good intent, and it's not always a bad thing. So I'm going to be traveling out to New York tomorrow with Mr. T Trades, so it should be a good time. We're going to be flying out early in the morning, so Thursday, unlikely to have any trades because we're probably going to be in the air / landing during those hours that I usually look to participate, the early New York session. So not going to be watching the market too much, but when we get there, we're going to be in the NASDAQ for the closing bell on Thursday, which is going to be pretty cool. So I'm going to try to get some footage in there to share with you all and meeting some other people as well, some people that you probably know out in New York, which should be a good time. So we'll try to share as much as possible. Friday potentially will be a trading day. I'll be tracking the markets likely in the morning. If there's any plan, analysis, or trades that I execute, I will also share that here with you. So with that all said, I'm off to New York. We up off the open. Good to go, baby. We're out of here. Now back from New York. It was a really great trip, and I hope you all enjoyed those clips that you just saw before this. I wanted to quickly recap Thursdays and Fridays trading day as I said I would. Thursday, I didn't have a trade like I mentioned before. We were on the plane, so I personally didn't take anything. Now, Friday was a day that I was tracking the markets in the morning with T, We were both looking to the upside based on the narrative on the higher time frames. The narrative and bias comes from having a Monday high expanding through Thursday down into a relevant low. That to me means Friday in an expansion week is going to cap off that weekly range and create that lower wick of the weekly candle. But the entry logic didn't quite deliver in terms of giving a good, clear entry. So that was another day that had to be passed up on. The only focus was on indices, so no trades on Friday as well. So that there is basically going to be ending off my week. Today is Sunday, so that means I'm going to be recapping all the trades that I took, every decision that I made, and every trade I avoided to make sure that every single week I'm improving from the previous, staying consistent in my process and making sure I'm following what I need to be doing, because there's always room for improvement. Sometime in the future, I will get a little bit more in detail in one of these videos for how I'm recapping and reviewing my weeks for myself. So that's something that you can look forward to as well. But with that being said, that is the end of this video. I hope you all enjoyed and found it valuable, and I will see you in the next one.